With that, let's bring in Tom Lee, head of research at Fundstrat and CIO at Fundstrat Capital. He's also a CNBC contributor. Tom, good morning. Good to see you.
Good morning.
Why don't we start off with the markets hitting new record highs once again after that CPI report that, in all honesty, it was kind of mixed. Headline was better than expected. Core was just slightly hotter than expected. What's your take on that?
Well, I think it's just a reflection of the fact that the market was bracing for a hot CPI, knowing that not only was the Fed, but economists were warning that we'd start to see inflation coming through in the July CPI report. So I think it was actually elevated compared to where it was in June, but I think it was much better than expected. So it's one of those rip off the Band-Aid moments.
All right. We were showing the CME Fed Watch tool earlier, just under a 95% chance of a cut coming up in September, being priced in by bond traders. That rate cut, what area of the market does it benefit? Does it definitely just benefit the cyclical sectors? What does it mean for the tech trade, et cetera?
To me, there's a whole area of the market that gets sort of lit up when the Fed gives sort of that dovish signal, or Fed is resuming its cutting cycle, and I think that's things that benefit from liquidity. So that's financials, small caps, and also, believe it or not, Bitcoin.
Oh, Bitcoin. All right, that's interesting. By the way, potential rate cut. We've often thought we're going to get those rate cuts, and they don't actually happen, even though they're being heavily priced in right now. With that,
that's right.
I want to get to your word of the day. What's your word of the day today, Tom, and why?
The word of the day to me is breakaway. And the reason I'm saying that word is that in early July, Bitcoin made a breakaway move, and I think Bitcoin has been leading the markets by a month. So believe it or not, I think that this is the month that the S&P, makes new highs towards 6,500, 6,600.
Interesting. So you think we hit new highs this month? What's the catalyst? Because, we're pretty much through earnings season. So what pushes us higher other than a lot of optimism over a rate cut coming up?
Frank, I think part of it is positioning and sentiment, because I think investors were thinking this is the dog days of August and that we'd be getting some hawkish inflation data. So I think some of that's just the relief that, in fact, CPI was better than expected. I think it's also just follow through because we've had a pretty decent earnings season. And at the end of the day, the economy is holding up pretty well. And, I'd say that it has a lot to do with the fact that August will probably be a surprise and markets are going to be stronger.
All right. Tom, you didn't send us a pick, but I'm going to guess that BitMiner might be your pick today. It's a company that you're involved with. I want to talk to you about Ethereum and also BitMiner.
Yes. Well, Ethereum, has probably become the surprising sort of hit for cryptocurrencies this year because it's up 28%, outperforming Bitcoin. But, in some of the work we've done, we believe it's the biggest macro trade over the next 10 to 15 years. And a lot of it has to do with the fact that stable coins have really become the ChatGPT moment for crypto. And now we have the Genius Act and Project Crypto from the SEC, which is Wall Street essentially running onto the blockchain. But one of the best ways we believe to sort of have exposures through Ethereum treasuries, and that's a company like BitMine, which I've become chairman recently.
So when we're talking about Ethereum, it's one cryptocurrency. Stablecoins are obviously in the news, especially with the Circle IPO and Circle just reporting its earnings and offering more shares. And then you mentioned this Bitcoin as well. Why are you so bullish on Ethereum? What are the opportunities you're seeing in Ethereum in particular?
Well, Ethereum is the second largest blockchain. And it's different than Bitcoin because with Bitcoin, you can't really do programmable contracts, so smart contracts. Wall Street needs to find a stable and legally compliant blockchain to work on. The majority of stablecoin creations are taking place on Ethereum. And when you look at where JP Morgan is building a lot of its layer 2s, or Coinbase or Robinhood, they're choosing to do it on Ethereum. So it is the place where Wall Street is essentially financializing the system.
All right. So, by the way, you're not the only bullish person or bullish company when it comes to Ethereum. We're just looking right now. Standard Charter raising its year-end target for Ethereum to 7,500 from 4,000. Right now, Ethereum's trading right around, I believe, 4,700. Are you this bullish, 7,500 by year-end?
I think that's within the realm of expectations. Ethereum, I think first needs to clear its prior highs of around 4,800. It's within 6% of that now. Believe it or not, Bitcoin's obviously been making many new all-time highs this year, but Ethereum is still below its 2022 highs, 2021, 2022. So I think once it clears that level, I think Ethereum and small caps tend to be correlated. So to me, 7,500 actually might even be on the low end of what's possible.
Really?
I think I've seen many targets of 10 to 15,000.
All right, one more time before we get out of here. You're known for your granny shots. Can you give us one of your granny shots right now with the fact that we have the markets trading at all-time highs, the S&P and the NASDAQ, again, closing at record highs yesterday?
Yeah, I mean, I think really one of the granniest of our granny shots is Nvidia. It's still one of the most important companies. Well, it's probably the most important company in the world. And in terms of forward multiple at 30 times, it's actually still reasonably priced. I believe its PE multiple is still ranks number 38. There are 37 stocks in the S&P 500 with a higher PE than Nvidia.
All right, we've got to leave the conversation there. Tom Lee, it is always great to see you. Thank you very much. Appreciate the picks and the time.
Josh, the fundamentals are good. The technicals are good. There's cash on the sideline. You've got a lot of buybacks. The capital markets activity, as we know, IPOs have certainly returned in a big way. And if that's not enough for you, you take a look at what exists right now, according to Reader, in fixed income, and you have a pretty solid investing environment. You want to take a shot at that?
Yeah, let me do like a little baby encomium for Rick Reader. It's so refreshing to hear a fixed income manager speak positively about the opportunity in equities. I think what makes him elite and one of the best market commentators over the last few years is the versatility of thought that he has, and looking beyond what the rate picture is, and trying to understand, well, why are people making all this money in NASDAQ stocks, in large cap US, and where's the puck going to next? So I think that's what makes him stand out, and why I always pay attention to his comments. And I thought you did a great interview with him yesterday. I want to build on one of the key points that I think we want to make today, the broadening out. Biotechs are up today. When was the last time you've been able to say that? Not just up, but the XBI is up 2.7%. And some of the leading names in the space are up closer to 4 and 5%. The XBI is putting together a two-day run of 5%. It's early. I wouldn't tell you that anyone is cheering, but this is like one of the most left behind areas of the market. And if you want the small cap thing to be sustainable, it's got to transcend value stocks. It's got to get into areas, speculative areas like small cap biotech. And that's what's happening. Another left behind area of the market, home builders, up another 2.5% today. Home builders are up 6.5% over the last 2 days. And again, it's early. Nobody's breaking out the champagne, but this is a really key area of the market that you want to see finally get some positive attention. Look at small caps broadly. From the Liberation Day low, small caps are now slightly outperforming the S&P 500. From April 8th through today, the Russell 2000 is up 29.7% versus the S&P up 29.5%. The All Country World Index is up about 27% over that same period. So what you're not going to hear right now are the naysayers who would tell you, it's all Broadcom and Nvidia, it's all AI CapEx. Yes, that is the most important growth driver for the big picture, but you are seeing traction in home builders, in biotechs, in all country world. All these developed nations are rallying. And I think that's really important if you're going to stay bullish from today forward. So when Rick said this is one of the best environments for investing he could remember, I think I know what he means. He's not saying starting valuations for the S&P are great. He's just saying, like, look at all the different areas that are working and all the opportunities that are being created. And I think you'd have to agree with that so long as rates stay on this downward trajectory, which today they're following through to the downside, and we didn't have another inflation report. So it's a really key point that he makes, and I agree with it.
Kerry, BTIG's Jonathan Krinsky is looking at small caps, asking the question, is it different this time? They have had a surge, and in an incredible one. In just 2+ days, the Russell 2000 is up 4%. That gives you an idea of what has happened this week. In terms of the reader perspective, Wolf today speaks about the fundamentals, and they say the outlook looks strong, and they point to earnings. On the technicals, they weigh in there as well. They say the best internals in 2.5 months for the Russell 3000. So the 2000 is solely representative of small caps. The 3000 gives you a much broader view of where we are. It's, in many ways, that speaks to exactly the kind of conversation that we're having on our desk today.
Yeah, well, if we look at the market beyond the Mag 7 and the other big tech names, which, we're talking about here, they've lagged. It's time for them to move. I think they've been waiting for a rate cut or the assumption that there's going to be a rate cut, and I think we're beginning to see that. The jobs number, unless miraculously it comes out really strong, I think that would cement the idea that we're going to have a rate cut. And Josh was talking about biotechs, particularly the small ones who don't make any money. They need money from markets, and the IPO market has been strong. Presumably, the secondary market will be strong, and so yes, I think that can continue. If you look at the Mag 7 multiple, it's about 30 times forward earnings. The rest of the market is 20-ish times forward earnings, and small caps got to be lower than that, probably 15, 16 times. So this all makes sense. I would two words of caution, if I could. One is that the IPO market being very strong is good in the near term, definitely good in the near term, because people have been waiting. I mean, we're waiting for opportunities to invest other than in Nvidia and Broadcom and Meta, et cetera.
You'll get another day, by the way,
correct.
And the bell may ring at any time during this program as bullish awaits a trade that is going to look pretty bullish, we think, off the open. Priced at 37, the range was 32, 33. And we'll follow it. So if you hear the big ding of the bell behind us and a bunch of cheering, that's what that's about. But, the point you're making, what's the caution part of that story?
What I was going to say is that the strongest years for IPOs, if you go back in history, was 1999, 2007, 2021. And, we know what happened in the years following.
Yes,
so,
we're
nowhere near that.
Close
but
to talking
people
about
need to have that in mind, I believe.
This is going to be, it has the potential to be the strongest year for IPOs in, a couple of years. We're not talking about in the annals of historic kind of years. So I'm not sure I go with that. Sarat, the environment, fundamentally, technically, what do you think? How do we look?
Definitely favorable. I mean, if you're seeing this broadening, you're seeing the anticipation of rate cuts, and to your point of, hey, why are the Russell stocks doing well? Well, so many of them are financial services stocks. So many of them need capital markets, need interest rates to be lower. So if that's coming, and it's coming for the right reason, Scott, which is, hey, if maybe inflation's not where it is and it's coming down, and if employment's going to be coming down, we need some more fuel in this economy. That's going to really help the stock market, especially the broadening part of it.
I want to give two stocks real quick related to home builders and the rally that we're seeing. Number one, Williams Sonoma. That's a name that we added to the ETF in the most recent rebalance in July. And how about this name? Installed Building Products. Take a look at this. This is a small cap company, $7 billion market cap. What do? Residential insulation. And if we are actually going to see an uptick in improvements to homes and new homes being built, this company will benefit from it significantly, and it's had a heck of a run since last Friday's jobs report.
Hey, given Rick Reeder's view and how he expressed it yesterday, and I even at one point referenced as he was articulating it, well, if anybody at the White House is watching, they're standing up and cheering like, that's the story we've been saying. Well,
nominate that guy.
I don't know exactly. I don't know if they were, but now he's made the list, apparently, of possible next Fed chairs. Steve Leisman reporting, of course, today that we're up to 11 now, and Reeder's on the list. Zervos, who's a frequent guest on this network, obviously, and David Zervos and Larry Lindsay have made it too. And speaking of the Fed, this Treasury Secretary made some comments today that rate cuts could start with 50. He thinks 50 may be warranted in September. Could have already cut in June and July, he said, if the data was more reliable. In other words, if you had a more believable read on jobs that maybe they've already would have cut, and they should be, interest rates should be 150 to 175 basis points lower. B of A says we're not buying any of that. The Fed's going to stay on hold until the second half of 2026, which is interesting. And you'll get Goolsbee and Bostic today as more Fed speakers hit the tape in the 1 o'clock hour. But I thought, Carrie, that was pretty interesting that Reeder was here yesterday. He made those comments, and then lo and behold, his name is on the list. I'm not saying there's a definite cause and effect, but
I think it happens, Scott.
Your
I
show
think
is
it happens.
your show is watched worldwide.
Seems a little fishy.
It was really impressive.
Seems a little fishy. All right. In terms
I would
of
like to
positioning,
cut rates by 500 basis points. Am I on the list?
yeah, well, you might be.
Yes.
You might
Hey,
be.
I want to say one thing. Look at the rate sensitive stocks. Look at the rate sensitive stocks, even away from real estate directly, that are like, let's say, in technology or in media. But so my bet is Rocket. So Rocket, obviously, Rocket Companies owns Rocket Mortgage. Look at what this stock has done over the last month, and they're making some really big bets and some big acquisitions in the mortgage servicing market and the realtor lead gen market. They bought Redfin. That acquisition closed. They have a transaction with Mr. Cooper. Hopefully that one closes as well. They're doubling down on a resurgence in real estate. And look at what that stock has done. Now you've got some big hedge funds in there. You've got Value Capital, which is an activist. I'll give you another one. Look at the difference. Look at the way SoFi has traded since reporting earnings. They were good. They weren't this good. That's a bet on higher rates. And then I'm going to give you the contra. The entire gain in Circle was wiped out after they reported. Circle is a bet on high rates, higher for longer. Think about what their revenue is. It's the interest from money market fund, basically. Lower rates means lower revenue for Circle. That stock had a huge gain post-reporting, puked up the entire thing. And I think what you're seeing the market do is extrapolate this idea of lower rates, not just in home builders, but all over the economy. All these stocks that we're trading that are not real estate companies where there's a rate sensitive situation. If that has legs, we're probably only in the first or second inning. The FedWatch tool is now saying 100% chance of a 50 basis point cut. A month ago, there was only a 57% chance of a 25 basis point rate cut. So look how fast the market has changed its expectations.
And
my hat is still in the ring. I'll cut him to zero.
All right. Well, you could be added to the list. Leisman's on the case. He'll follow, of course, as the pool is growing ever larger. Circle, you mentioned, SoFi, probably a fair amount of retail participation in those types of names. What do you think about Cummins, Electronic Arts, which you have in the T? You don't have Centene anymore.
Cummins is a reasonable valuation, upper teens, participating clearly in providing power in data centers. So I think there's a longer-term thematic AI story there. Electronic Arts, look, they're having an uptick in engagement. You have Madden 26 coming out for both football and hockey. They have the FC soccer franchise. So that's more about, I think, in the coming quarters, can they sustain that engagement? I'm not that excited about that one, but I think, look,
new record high.
Yeah,
I mean, it is a new record high.
It is a new
today.
record high. I will acknowledge that. And look, we own it. We're happy about it, but I also understand the fundamental driver behind it. So I'm throwing a degree of caution there. But I think overall, look, it's about the momentum factor, and the momentum factor is the leading factor in 2025. Now, today, it is down 75 bips. That's something to watch, because if you tell me that the momentum factor is going to roll over in the next 30 days significantly and have a 5, 6, 7% correction, I wonder if at that point the market will struggle to continue to make those gains.
I feel like it would only be that way if there was a sizable broadening from here forward, which is why maybe you would have that happen. TransDigm is you.
This is one of our core holdings. I mean, stock had earnings last week when it was down 10%. But if you look at kind of what TransDigm does, which is airline aftermarket parts, they're levered 4.5 times. If rates are coming down, they just announced a 5% cashback dividend. And the market for airline aftermarkets is huge. So I think this was a misunderstood stock that got badly hit on earnings. And I can see why retail investors are coming after it, because not only are you going to get the growth, but you'll get some dividend out as well.
Joe was just talking about momentum having returned. It certainly feels like it's returned to Apple. Stock's up more than 10% in 1 month. It is green yet again today. It's above $232 a share. You've been a buyer of it personally, recently, on several occasions, including, again, today?
I will, yes, again today. Let me walk through all of it. I know Jim Cramer right now, if he's listening, is not going to be happy because, yes, I am trading Apple, and I'm taking advantage of what I believe to be a significant rebuilding in portfolio manager positioning, in particular for growth managers.
He may think you're smart, like using the fact that there's some renewed momentum and life behind the name.
So
he can come down here, by the way, and sit on the set. We have an empty space today, so we'll find out if he's angry or happy with you.
Okay,
Maybe.
Last Wednesday, the big bite was at 206 in Apple. I would say that somewhere near the upper 60% range of my entire trading Apple position right now is at that level. Thursday, 217, Friday, 221, Monday, 226, today, 232. We're getting close to my target. I think the target here is around 240. I think at that point, a lot of the momentum for portfolio managers building their position, that will begin to fade. I'm trading this. You have to put a stop in. Below 222, I would neutralize some of the more recent buys, but I am going to maintain a longer-term position here in Apple. That is for sure, because I do think there's been a shift clearly in the relationship with Tim Cook, Apple, and the president.
I'll tell you what, a firm called Alpine Macro today says Mag 7 stocks are quote-unquote mania candidates because they've had a straight line run-up starting on April 9th, for the most part. Some of the reactions immediately after earnings weren't that fantastic, but they seem to have picked up because NASDAQ in its own right has been hitting new highs, like Meta. Your Meta, Carrie, hit a record high again today. They obviously had the Threads number come out this week, which was really strong.
Huge.
So what about this stock here now?
Yeah, I think it can go higher. Meta, Google, Apple, and Nvidia all basically at all-time highs. And I think when it comes to the fear that people have had about antitrust, anti-competitive behavior, taking some of these companies apart, we just saw what happens if you make a deal with the White House. I mean, there are ways to get around your problems. And Meta would be a beneficiary of that. All of them. Apple, I think the surge in Apple has to do with the fact that they have been under attack by administrations over the last few years. Oh, yeah. That's gone away.
No, you
with
show
Meta,
up, you give a golden gift, and you your stock takes off.
Let's make a deal.
Wash, rinse, repeat.
The positioning helped.
Nvidia, by the way, speaking of this topic, Target and the deal, obviously, that they've made to be able to sell their chips into China. Price target 225 from 180. It's overweight still at Piper Sandler. Everybody owns that stock. Semiconductors, worth watching today. Broadcom hit a record today. The Semis ETF hit a record today. Taiwan Semi hit your buy list today.
Yeah, exactly. Well, we bought it when I was on vacation, but first time I'm back. And they manufacture 50% of the world's chips and most of the high-powered and more complex chips. All of the AI chips are pretty much coming from Taiwan Semi, and we believe that there's a long runway. We've got 10 years of growth that we think is exceptional to earnings, and it's been discounted as a multiple because of the threat, possible threat because of China's invasion, which we think is over discounting. So we made the purchase. We wish we owned it earlier, but we bought it now.
Okay, so semis again, ETF hitting another record today, and then there's software. Okay, because that's telling a different story. The IGV is on track to snap a 4-month win streak. If you look at the amount that some stocks in that universe are off of their 52-week highs, 2/3 of the IGV is down 20% or more from those levels. Names like Samsara down 47%. Adobe, which we have hit relentlessly this week, is down 41%. Salesforce is down 36%. What's going on with Salesforce?
So, I mean, we still like it. The bear case on Salesforce.
What do you like about it?
Well, Salesforce is embedded in almost every organization, and they're going to be able to use AI to get efficiencies out there for their customers. The argument is that AI is going to allow customers not to use them. We think that the amount of information that Salesforce has on their customers and the ability to help them grow is going to be much better than the other side of it, which is customers don't need them anymore.
What do you think something that
it's employment growth.
something that the market does not?
Well, what I know is that Salesforce has brought down their growth rate over the last couple of years, and the market is saying that's going to accelerate faster. We think that's not the case. We think it's an investment period for Salesforce, and they're going to grow through that.
Josh, what were you going to say?
It's the employment rate that's affecting Salesforce. This is the ultimate pro-cyclical software company. When there's lots of hiring and expansion, that's when Salesforce has the most opportunity to rack up new wins with both existing customers and with new customers, new companies. And when that goes into reverse, it's not that it's catastrophic, because to Sarat's point, they're extraordinarily embedded, not just with the Fortune 500, but with small and mid-sized businesses all over the world. The problem is the growth rate, the expected growth comes down, and you're paying a high multiple for this name, not sky high, but not cheap. So look at the last 3 unemployment reports, look at the trends, look at initial claims, look at continuing claims. Not the best environment for a company like Salesforce that is effectively a call option on the growth in employment in the country.
All right, welcome back. Let's talk about some restaurant stocks today, because many are ugly. And that's following Kava, 52-week low. Their same-store sales growth was a disappointment, to say the least. There's that stock. But let's show you Brinker, EAT. Man, Chili's is killing it. Their comps are up 21.3%. The guidance was well ahead of estimates. Josh, Shake Shack was down, I feel like, on the Kava print, and so many of these other restaurant stocks recently, the commentary's been terrible, and so have the numbers.
Let me explain it in a very succinct manner. This is as simple as people staying home as opposed to spending 5 days a week in the downtown area of one of the 20 largest cities. Kava and Sweet Green, which already blew up, are highly reliant on people dressed like me, sometimes with a vest, depending on the weather, going to work,
depending on the
coming down
job.
the elevator, pre-ordering a salad or a bowl of whatever on an app for $17.50, and then bringing it back up to their desk to work. And with less people doing that than ever, and that culture never really recovering and coming all the way back, tough to be those companies. Chili's killing it, because Chili's is in the suburbs. Not that I know specifically where it is, but it is not reliant on the urban professional who is 28 years old looking to order something for $17 and eat it in 15 minutes. Chili's is the opposite. The restaurants are where people live. You don't really need to know anything more than what I just laid out. That's what's going on.
Okay.
I don't see it changing.
DoorDash is an interesting one today. They, along with McDonald's, expand their partnership. DoorDash is off today, and you think you know why?
Well, it's off 5% today because this Amazon story about same-day delivery on grocery, it is a big deal. And it's affecting not just Dash. If you pull up a chart of Instacart, CART, you'll see that's down about 10%. Uber's down a little bit here today. And it's even affecting Walmart. And Walmart looked like it was breaking out ahead of earnings towards that February high at 105. So Dash has been in the strategy for quite some time right now. They had excellent earnings. Those earnings exhibited that they are capturing market share significantly. I'll take the other side of this, down 5%. I still think Dash has further to go here on the upside, Walmart as well.
All right.
But overall, the Amazon story, that's a powerful force.
We'll get the news. Josh Brown's best stocks in the market has some new names that he is focused on. They are?
So we're going to talk chip equipment. Most people are familiar with Applied Materials, AMAT, not on the list right now, but KLA Corp and Lam Research are. So I'll start with CLAC. This is one of the most important companies in the global semiconductor supply chain, and they are just shocking Wall Street with quarter after quarter of explosive earnings growth. 60% growth in earnings last quarter with a 30% jump in revenue. Lam Research also about $120, $130 billion market cap. They're roughly the same size. look, these are companies that do things that wouldn't occur to the average investor who's not paying that close attention within the manufacturing process that are critical. Process control, wafer inspection, etch tools, coating, cleaning, but you really can't do what Nvidia does without these companies and the areas of chip manufacturing that they are involved with. So that's why these names have been working so far. I think what's really interesting is what we just did on tariffs, and for strategic reasons, why it's so important for there to be more semiconductor manufacturing here in the United States. It's both a challenge and an opportunity for these companies. Both of them derive less than 10% of their revenue globally from North America. That's going to go up. And I think Wall Street is betting that that's going to be more of an opportunity than it will be a challenge. And that's why these stocks both look so good. I like Lam better. I think that one still has more upside potential than KLA from today's levels. But I do like both. And I do think the sector will remain in favor. In the piece I did for Pro, I put in some stop losses and where you'd want to come out of these trades.
Okay.
But these are both incredible looking charts.
All right, check it out on Pro, and you can see those levels that Josh is talking about. We're getting closer on the IPO here at the New York Stock Exchange of bullish, indicated now 89 to 90. It did price at 37. The range was 32 to 33. So you already had a pricing above, and you're going to have a really big open for this IPO, which we think is getting ever closer. May not happen in the next minute of our program, but it certainly will in the several that follow the halftime report today, and we'll certainly bring you that as soon as it does open for business. Let's do final trades. Josh Brown, what you got?
Post is down 7 points from before it reported its best earnings quarter ever. I think the stocks are screaming by in the low 40s.
Okay, thank you for that. Sarat, what about you?
Sticking with TransDigm, I think it's really cheap at these levels.
Thank you very much. Carrie Firestone.
Thermo Fisher, it's at the 200-day moving average, and things will get better. Federal funding is restored to universities.
Okay. And Joe T.
I like you talking about the 200-day moving average. Amazon breaking out towards the upside from here.
Hey, she knows a thing or two about the market.
She
I mean,
sure
you just
does.
wake up.
She sure does.
She's been talking about the 200-day moving average for an awfully long time. Used to run those funds at Fidelity.
100.
Used to run those funds at Fidelity. Carrie Firestone did. Thank you, guys. We'll see you on the closing bell. We'll see what this market does in that final stretch.
Hey, I'm George with Blue Cloud Trading. It is Wednesday, August 13th. It's currently 4:26 p.m. as I'm recording this. So the market has closed. The Dow is up 1.04% today. The NASDAQ was up just 0.14. You'll see that the price gapped up in the morning and then dropped and then just kind of stabilized around the prior day's closing price. S&P 500 did something very similar. It gapped up, dropped back down to the closing price from yesterday, and then moved up slightly, up 0.32%. The clear winner today, Russell 2000, up 1.94%. I mentioned in yesterday's video that it was looking the most bullish and it had the most potential. And yes, it's moving up, as you can see, quite well. Let's take a look. Here's what we're going to do in this video, folks. We're going to take a look at the stocks that they talked about on the show. So on the halftime report and on this morning, I also took a clip from Tom Lee. He was on the Worldwide Exchange and this morning. So both are very new videos, and Tom Lee shared his thoughts on the markets, especially with Ethereum and Bitcoin as well. And then Josh Brown also talked about some of the stocks, some of his favorite stock picks. We're going to look at those. So we're going to look at the index ETFs, like the SPY, the Qs. We're going to look about, are you ready? 25 stocks and ETFs that are mixed up in here. And what I've done is I've already previewed these stocks that they talked about. And what you'll notice is there's either a blue flag on the left or there is not. If there is a blue flag, that means that these stocks and ETFs have passed the Ichimoku test, which essentially is looking for stocks or ETFs that are strong on both the weekly and the daily time frame. We want both time frames to confirm that this is a strong uptrend. That way we have a higher probability trade, essentially, if you're considering any of these stocks or ETFs to buy. We'll look at some of the Mag 7 stocks and also some of the strongest sectors, okay? So let's get into it. We'll start off first by just, again, looking at the markets, and we saw what happened here. Let's look at the map. This is the heat map, and this is going to show us how the individual stocks within the S&P 500 basically performed. What you'll notice here, technology stocks, they weren't, they didn't do as well as you'd expect, right? Like Microsoft, for example, was down 1.64. Oracle was down 3.81. Palantir down 1.39. Nvidia was down, Broadcom. But it wasn't the entire sector or industry, because you can see here that there were some winners, like AMD, for example. Visa, Berkshire Hathaway was up. A lot of the healthcare stocks did well today. So did the energy stocks and basic material stocks. And but Walmart was down, Costco was down, Google and Meta were down. So was Netflix. So let's take a look next at the groups. Now this shows us what the one-day performance was. And what you'll notice here is that the healthcare sector was actually up the most. It was up 1.98%. Okay, then it was consumer cyclical, basic materials, and real estate. The weakest sectors: consumer defensive, communication services, and technology for today. But if you look at the one week performance, this is what it looks like. All right, you got basic materials, healthcare at the top, energy, real estate, utilities at the bottom. But pretty much all sectors are up this week. And if you look at the 1 month performance, right, the only sector that was down is energy so far, down just 0.39%. So let's go ahead and start off. We'll start off with the index ETFs, and then we'll run through these very quickly. We won't spend too much time. The beautiful thing about the indicator I'm using here is at a glance, we're going to be able to identify the strength of the trend, whether it makes sense to be adding a position or not, or considering a stock. And so, yeah, we're looking at the SPY. And what we're essentially looking for, folks, if you're new to this channel, is price, okay, these little Japanese candlesticks here, to be above the moving averages, the 9 period, which is the green line, and the 26 period. The green one is called Tenkan-sen. The red line is called Kijun-sen. This is a Japanese indicator. The cloud itself, so we want price to be above this cloud that you see right here. That's the Senkou Span A, the lighter colored blue line, and the Senkou Span B. We want that light colored blue line to be above the purple one. The other thing we want to see is this right here, this white line that you see in the background, just projecting back here. That's actually today's closing price, okay? But it's projected 26 periods into the past. So all you need to do is just kind of draw a line that backwards, and that's where you'll find it. We want that white line to be above the price. Once you have all of these elements in order, plus the green line above the red line, it's all very bullish, and that's a very strong uptrend, okay? So, yeah, the SPY gets that blue flag because it looks the same on the weekly. Now, I'm not going to look at all the weekly charts here today because we've got a lot to cover, but you can see I've already done my homework, and the SPY looks good. Let's look at the next one. It was up 0.34%. The QQQ ETF, also all-time highs. It was only up 0.05%, but all the elements look good here. If you look down below, there's one more indicator that I like to throw on the charts is the directional movement index. And I've got it at a setting of 9. And the positive DI is the green line. The negative DI is the red line. And this white line here is the ADX9. And that, if that's moving up, that means momentum is increasing. So that's all good stuff. Russell 2000, okay, breaking through that 226.71. I told you guys yesterday that it closed by just 10 pennies above the high here and expected to move up. It did. So it was up 1.96%, the most out of all the ETFs. The Dow Jones was also up today, up 1.07. All right, and but it's going to come close to a level of resistance right here of 451.34. The VIX down 1.97%, just kind of stalling around this low here. So that's a good thing. We want volatility to be, low. We don't want that to be spiking like it did back in April. You can see, and then the market, of course, dropped as a result of that. FEZ, the Spider Eurostoxx 50 ETF. This one was also up 1.07%. Okay, but it's the technicals here with the Ichimoku is not exactly perfect because we've got the faster moving average. The 9 is under the slow one, the 26. And we've got still a bearish future cloud here with Senkou Span A under the Senkou Span B. So this cloud actually projects into the future 26 periods into the future. And the just so you understand what each line represents here, the lighter colored blue line is the midpoint between the two moving averages here, projected 26 periods into the future. And then the purple line, the Senkou Span B, is actually the midpoint of the last 52 periods, okay, projected into the future, 26 periods into the future. Very unique indicator. And it's been around for, I mean, we're talking, it was incepted in the late 1930s, published in the late 1960s, and then mostly adopted here in the United States in the 80s by a lot of financial institutions, including Tom Lee's head of technical analysis at Fundstrat. I've seen him utilize the Ichimoku in some videos. All right, let's keep going here. But I've been using this thing for many years. And so I found the value of Ichimoku compared to a lot of the other traditional moving averages. I mean, you can certainly put on a 20 and a 50 and the 200. I've got that 200-day there just as a backup to see where price is in relation to the 200-day. That's that dotted yellow line. But essentially what you want, but this is just a comprehensive indicator, and it looks a little bit messy, but once you understand the rules, which is you're just looking to see where price is in relation to the cloud and the moving averages, that's it. And you're looking at the last candle. The other thing I like to look at is where the prior highs and lows were. That's important. Let me get rid of that trend line there and that one. Okay. All right, so let's keep going here, folks. So we're going to look at the stocks talked about and ETFs talked about on the halftime report. Homebuilders, XHB is taking off. Look at this one on the weekly chart. This is the first week where it's breaking through the cloud, guys. Now, the only problem with this one is on the weekly is the fact that the Senko Span A is still under Senko Span B, but it's going to take a little longer for that to have to break through and cross above. But overall, I'm liking what I'm seeing down here with the directional movement index. And so I would certainly consider adding a position in XHB in the future. You can see here in the daily chart, it's broken through the 200-day moving average, and it's moving up steadily. So it looks really good. ACWI, all right, now this one here, the iShares ACWI Index Fund ETF. This one is also looking pretty strong here. It is above the moving averages. Okay, they're both at the same level. The green line and the red line, they're both superimposed on top of each other, as you can see right there. And so price is above, and it's above the cloud on the daily, and on the weekly looks good too. LRCX on the weekly, you can see it broke through that little congested area. Here it is on the daily, also looking good. That's Lam Research Corporation. IBP, Installed Building Products, is another stock they talked about in the residential construction industry. So this one is also taking off here. Look at that on the daily chart and on the weekly, breaking through that cloud here for the second week in a row above it. RKT, Rocket Company, Josh Brown's final trade back on June 22nd. And this one has been doing quite well. He brought it up again today. Here it is in the weekly chart, and here it is on the daily. So technically very sound. It's a company that apparently, looking at the fundamentals here, doesn't look particularly good, but it is technically very strong. It was up 7.39% today. You might be chasing a little bit too far. It's gotten a little ahead of itself here, but SoFi Technologies Inc. All right, now this has a, let's see here, SoFi Technologies Inc. Well, it's above the two moving averages here on the daily and above the cloud, and on the weekly chart also looks very strong. Okay. KLAC, which is KLA Corporation, that's the ticker symbol, KLAC. That one looks pretty strong here on the weekly and on the daily. So does Electronic Arts. Here it is on the daily. Here it is on the weekly. It broke through this high of 169.44. So I like what I'm seeing here with EA. CMI, Cummins Inc., industrial sector, diversified industrials. It broke through this prior high right here. You can see that. Let me just draw that trend line so you can see it. Right there. That happened this week. This is a weekly chart that we're looking at right now. And let's look at this and let's look at the future cloud. Notice how the future cloud is bullish, okay? Notice how the ADX is moving up. Notice how the positive DI is above negative DI. All these things tell me that this is going to take off some more. Daily chart, very strong, all right? This is what you want. Better to be adding positions in stocks that are actually moving up. What that signifies is there's a demand for the stock, that there's interest, okay? There's participants. Look at all the buying volume here, down here in the bottom. All right, even though it's been declining a little bit, it did spike up a little bit today. You can see it was declining a little bit as it was moving up, but now it's starting to continue its move up. So that's good. Walmart. Walmart today closed under the 9 period, but overall, if you look at the chart, it looks very strong, and it just barely closed under. That might be just a little blip. The other thing that's happened here is some of the momentum has come out. You can see the ADX is dropping. So after that move up, it could pull back some further, maybe down to the Kijun, maybe even down to the cloud, and then take off. Here's the weekly chart, still very strong, but stalling at this prior high of 105.30. That goes back to February 14th, 2025. All right, TSM. Here it is on the weekly. Whoops, here it is on the daily. So this one is kind of stagnant right now. It's kind of consolidating in this little box that you see right here. So I would wait on this one to break through that box. That would make sense, at least for me. Now, the rest of these, that's 11 out of the 25 that look very strong that I just talked about. But the rest of these, there's something off. There's something a little bit wrong with the technicals, at least. And it's either going to be on the daily chart or on the weekly chart. And that's why it doesn't have a blue flag here. Now, let's look at this. On the daily, XBI, the biotech, looks really strong here. Broke through this 200-day moving average today. High volume. ADX is moving up. It was up 2.99. And you know what? It could certainly continue its move up. There's no question about it. But if you look at the weekly chart, it's still under the cloud, okay? So it still has resistance right here, and that's about 3.8% away from where we currently are, which is why I wouldn't be adding a position here. Notice also on the weekly chart, the Chiku span, remember that white line? Notice how it's under the candle 26 periods ago, 26 weeks ago in this case. So that's also bearish. And if you look at the cloud itself, it's still bearish. What does that? So what does this mean? If you've got weakness on the weekly and you got a lot of strength on the daily, it's really up to you guys to determine if you want to take that chance of adding a position. Personally, my rules do not allow me to do that. Okay, so I would not add a position with this particular ETF. CART, Maple Bear Inc., Consumer Cyclical Sector. This one, look at this, guys. This was looking strong yesterday on the daily, okay? But look at it drop, 11.5%. What did it look like on the weekly, though? Now, that's a good question. Okay, so on the weekly chart, it looked pretty bullish. But if you look at the Chiku span, okay, this is from last week now, the Chiku span actually crossed under that candle. It was a warning. Do you see that white line there? That happened last week. Here we are. I'm sorry, I take that back. That happened this week. Sorry. This is all happening this week with price dropping under the Tenkan-sen, finding support at the cloud. We may get a bounce soon, but it is a big drop. It did stall at that 200-day and at the bottom of the cloud. So if I had a position in this, I'd probably be holding it to see if it can reverse at this point, because it does have support right there. SG on the daily chart is under the cloud, so I'd skip that one. That's sweet green. And by the way, I mean, this one has been dropping for a long time. If you notice here, it dropped under the, or it entered the cloud back here, somewhere around there. And since then, it's dropped 72.76%. So this kind of gives you, and this happened back in 2024, okay? December of 2024. So it gives you some insight about why you should not be adding positions when prices under the cloud. Impossible to identify. You could say, oh, it got cheaper. It got cheaper here. It got cheaper here, okay? But it dropped 71%. Now, in order to come back to this level of, okay, around the 30, let's say the $36 level, all right? Let's say we want to come back to 36 from $9.61. Let's measure how much of a return you need to make now from that level to 36.72. Okay, now look, notice this little box up here on the left-hand side, okay? It's gonna populate, it's gonna show us some information. All right, so now as I move this up, let's go to 36.72. Do you see what it says there? It's a 288.5% return that you need, okay, in order to return to this level. So keep that in mind. Shake Shack, also one of Josh Brown's final trades back on December 19th and July 31st. He's recommending this one here on the daily chart. Does not look good, folks. I would not be adding on this one. You can see it's under the Ichimoku cloud. It might bounce, it might recover, but as you can see, we've got a bearish cloud here, and it's under the cloud. So no on this pick by Josh Shake Shack. If you look at the weekly chart, it's also still under the cloud. And although this is starting to look relatively bullish here with this bullish harami pattern, the bullish harami pattern is when you have a large red candle followed by a small baby bullish candle. And I'll show you guys what that looks like on this cheat sheet that I have. All right, so like bullish, double candle pattern. There it is, the bullish harami Japanese pattern. Okay, large red candle followed by a small bullish candle. Now that is bullish. Does it mean that this is going to definitely turn around? No. And because it's stuck right there at that resistance level, I would hold off on Shake Shack for a bit. EAT also doesn't look that great. It's inside the cloud. No on that one. IGV is under the moving averages here. That's why it doesn't have a blue flag. CRM, Salesforce, there it is. It's showing a little strength today, up 2.32%, but under the cloud, no. No on Adobe, even though it's up 3.73. How about TOST? No on this one, even though it is bouncing off the cloud at this time. We need to see some more, we need to break through those moving averages first. TDG is still under the cloud. No on TransDigm. What about Circle Internet? No on this one, down 6.16% today. BLSH, the IPO was today. Okay, let's look at the 1 minute chart on this one because there's not enough data here. All we can look at is an Ichimoku on a 1 minute, and you can see here it opened up right there at around $89. By the end of the day, it dropped, down to this level. So let's see, from the opening, it's down a little over 22% or so. And you can see it did move up quite a bit. Like it moved up in those first, I don't know, let me see. In the first 7 minutes, it moved up 31%. Okay. This is not a tradable thing in the beginning. When you have an initial public offered stock, it's the only thing that you could do potentially is day trade it. But there's so much volatility and so much volume in the beginning on that first day that it's really difficult to trade. But if you were shorting it, once it got under the cloud here, you would have made some money. Obviously, when it got under here, if you measure that move there, that was a 20% drop. Okay, Kava group. Let's look at the daily. Okay, it gapped under this low here. Not good. It was down 16.63%. It was inside the cloud, and now it's under it. No good. Here it is in the weekly. Has been bearish since it closed under the Tenkan back here. I take it back. Since, see this negative crossover? This price was above the Tenkan here. This looked relatively bullish on January 31st, and then on February 14th on the weekly chart, price got into the Kijins, and since then it's dropped 45.8%. Interesting. And then TMO, Thermo Fisher Scientific Inc., looking good here on the weekly. Wow, it's looking good in these last, I don't know, couple of months, but if you look at where it is in relation to the cloud, no. Here it is in the daily, showing some strength, but stalling at that 200. All right, let's get into the Mag 7. These are just three I'm going to cover here today. Meta, okay, it broke yesterday through that symmetrical triangle. I was thinking about adding a position today, but I changed my mind when I saw how it was reacting this morning. It basically stalled at around the prior day's high, did not really get above it, and we had a down day, so I did not add Meta. Apple was up again today, up 1.6%. Now, remember that trend line I mentioned? It was, high likelihood that it's going to continue moving up here for at least for a short time. But on the weekly chart, we are going to find resistance right at the top of the cloud right there. It's about 2.2% away. The other thing is the cloud is bearish still. All right, and the Chiku span is right here. It's not above the candle yet on the weekly, so I'd hold off on Apple. I'm also concerned about the tariff situation with China. I think that hasn't been resolved yet. So until that is 100% resolved, Apple and China and where the manufacturing is going to take place, and I don't think that's all cleared yet. So I would stay out of Apple. Is very reliant on China, and if anything goes negative there, this company is going to be hurting. Tesla on the weekly chart is inside the cloud. Okay, it broke above that trend line. You can see that high there, the high there, broke above it, but it's inside the cloud on the weekly, and here it is on the daily chart. Okay, holding above that trend line, but these are some negative candles, reversal candles, shooting star, hammer, another shooting star. So I would not be adding positions here. It was down 0.43% today. All right, and some of the strong sectors today. Let's look at those. We're not going to look at everything. We're just going to look at the ones that are blue flagged. XHB, Homebuilders. We already talked about that. That looks good. Daily and weekly chart, breaking through that cloud. GDXJ on the weekly looks good. On the daily, just up 0.15%, nothing major. COPX is still moving up 1.66%. GDX looks good. Down 0.24%, but overall broke through that consolidation and still holding up. Communication services was looking very bullish today, actually. Check it out. It broke above that high yesterday, and I mentioned that, hey, that we're probably going to see a continuation to the upside, up 0.78. IBIT had a good day today. That's the Bitcoin ETF. Since it broke that trend line right there, we had that reversal candle, we had that reversal candle too, but now it's cleared those two levels. I think Bitcoin is more than likely to continue to the upside now. So we'll see if I'm correct about that. SMH, Semiconductors ETF. Okay, this one up 0.39%, still in a steady uptrend on the daily and, of course, on the weekly chart, if I just showed you that too. Here's another one. ETH, right? Ethereum starting to cover this a lot more. Up 4.88%, but it looks to me like it might be stalling a little bit. Even though it gapped up, this is a much smaller candle. We'll see if it will continue moving up, but I like it. Overall, I like what's going on here with ETH. What about Tom Lee's ETF? Granny Shots US Large Cap ETF. This one, interestingly enough, there's the high right there. It came back. It looks like it might have re-entered the box here, but it's still holding up above Tengens and Kijins, and I think that it's still valid. It's a still valid, strong uptrend overall on the daily, and on the weekly chart, it's just kind of consolidating a little bit here. All right, let's look at the utilities XLU. Up 0.22%. Okay, nothing major happening here today, but it's still in a strong uptrend. XLP looking good. Still consumer staples. It dropped a bit today, and then it basically moved up. You can see that it actually, by the end of the day, it actually corrected itself and got back to these highs. If we look at this on a shorter time frame, like say a 3-minute chart, you can see all that happening. So here we are on the 13th. It gapped down, and then it reached a low back at 9:36 a.m. And since then, it actually moved up 0.83% since that low of the day at 9:36. So it kind of made a series of higher highs, higher lows. And then just right now on let's look at this on the 10-minute, for example. It's above the cloud on the 10-minute chart. Okay, and XLK, technology, up just 0.04% today. Still holding up above the moving averages. Everything looks in order as far as I'm seeing with the cloud, right? Everything looks good. Prices above the moving averages, above the cloud. Over here, we've got everything looking good with the green line moving up, red line moving down, and then the ADX moving up. That's what you want. And XLY, consumer discretionary, also looking quite good here because it broke through this high. Okay, that happened today. It was up 1.37%. So XLY is looking very strong once again. And I think that was it. Yeah, because I'm not going to cover the rest of these. And that's going to do it, folks, for this video. Thanks for watching. Thanks for supporting. Stick around for some information in a pre-recorded video on how you can become a member to access the member-only videos that I post every weekend, like this one here, for example, that I posted 3 days ago. You'll also be able to access older videos, get some more insight about my trading strategies, as well as just also 20 new stock ideas that I always post every weekend for the upcoming week, right? And I've added a bunch of the stocks that I talked about in the last video. So this week, during the week. Anyway, that's it. Thanks for watching, and stay tuned for that clip. If you want to stick around to find out a little bit more about the members only video that I post each weekend. All right, let's talk about that for a moment. So, you're coming to this channel for the first time. You may not have subscribed yet, which is kind of crazy. Can't believe that you haven't subscribed. This is free. Hit the subscribe button. I'll be popping up in your subscriptions in the future. If you hit the notification bell as well, you will be notified. So, where's the notification bell? Well, once you hit the subscribe button, okay, it will pop up the notification bell, and then you can select that. Another interesting that you'll notice is that you get this little plus button right next to the subscribe. That happens after you've subscribed. Why? Because they're giving you an option now to join. All right. And if you click on subscribe it plus, once again, another thing pops up. And this is the membership. This is where you can support the channel. Okay. You can either become a Blue Cloud supporter, a Blue Cloud trader, where you get access to exclusive member-only videos here under Blue Cloud Trader. Under Blue Cloud Legend level membership, you get those member videos. You can get access to day trading videos as well as the daily trade updates that I post. Now it says here under the community tab, it's not actually under the community tab. It will pop up in this next thing here. Boom. Once you've become a member, you'll see a new tab pop up called membership. You click on that, and that's where you'll find those daily posts on the trades that I've placed. What do I cover in this members only video? Like this one here, for example, that I posted just 21 hours ago on August 8th. I go over the, whoops, hold on one second. Let me go back. You will see exclusive member only video. Okay, weekend update on the trades I placed throughout the week, plus new stock ideas for the upcoming week that are setting up. Okay. And all you need to do is just scroll down. You can see you'll have access to older ones as well. All right, so you get a more insight about my trading strategies and the stocks that I'm actually holding, plus those 20 new stock ideas. All right, something to consider.